Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, May 13th, the year 2019. Let's talk trading. Horizontal lines opens. The open line is one of those static lines. So we can have daily opens, weekly opens, monthly opens. But once you plot those lines, that's it. They don't move. Unlike the highs and lows, which price can make new highs and new lows, and during the day they can move. But that open line, that's it. Whether it's for the 1 minute, the hourly, the 4 hour, or any of the other chart periods, once you plot that open line, it's static. And so it's a level that we can use to trade. When price meets the line, we can go in the direction price is moving. And you see, time is a concept. So we say, okay, the day starts at this time. It's like, really, it's kind of, let's see, what's the word? Not that it's random, but it's something we choose and we then agree on. So we agree that, across the world, that the trading day starts at a certain period of time. But those of you who watch my videos know there's my Einstein line, which you can say it's arbitrary, but it's whenever you open your trading platform, that's the start of your trading session or your trading day. So you can say price, you can gauge price relative to when you start, but that's different from what everybody else starts. So they might say, well, we're going to start at the day. And it makes sense. So we all have something to compare to. So when we say price is up today, it's above the open price. When we say it's down, it's below the open price. We all agree on it. But relative to when you started, price could be up from the open price, but from when you started, price could be down. So once again, it's relative, almost arbitrary. But something that isn't relative or arbitrary is money and risk management. Something that you need to do, you need to pay attention to. I was listening to, I mentioned I was listening to a trading podcast the other day. I guess it was early yesterday. And I just found some of his points interesting. This guy says he was a institutional bank trader. But if you think about it, most of what they do is money and risk management. And so when you put a trade on, you only want to risk a certain amount. And then as that trade matures, you might start doing things like adding to it or taking away from it as you start to lock in some of that profit so you don't give it back, and you start moving your stops around. That's all part of the money and risk management. And that's something that most beginning trailers don't pay attention to. That they're usually afflicted with the shiny object syndrome, looking for those new indicators that are going to make them a bunch of money. I mean, if you're a trader and you've been trading for at least a year, how many emails do you get per day offering you some shiny new indicator that's promising you to make lots of money, or some robot? It's just so funny that these guys that they've been around for a while and they keep coming up with these new robot systems because they know that people will fall prey to this shiny object syndrome. Okay, let's look at what's going on here right now. As you can see, we still have some open gaps, so there's still opportunities here. You can see we talked about the open. We're 54 pips below that weekly open, which right now, since it's the first trading day of the week, happens to be the daily open too. So you can see right here how prices move below that open. And here we have the yearly open, and you can see here for the year, month, week, and day, but right now these two are the same, you can see what happened. Now, yesterday I mentioned that price opened below the previous day's midpoint, and that's usually a sign to go short, but see it crossed above, crossed below, and you can see what's happened since then. And once again, here's the weekly open. Here's the open for the month, first trading day of the month. And here's the open for the first trading day of the year. And you can see what has happened relative to those positions. Now, getting into the opens, you've seen this screen before. Here are the opens for the last 12 months. And you can see where price is in regards to those opens. It's below them all. So how do you use this in trading? Well, it can give you a clue which way to trade when price reaches a line. And it's real simple. One thing about horizontal line trading, you just want to take the last cross, because either price is going to continue in that direction or it's going to reverse, come back to the line, go the other way. But if you always take that last cross, then you are trading with price. Sometimes you get a little, sometimes you get a lot, and sometimes you might have to stop out and reverse, but that's okay. That's part of trading. And this is just the ranges, but we're going to talk about open, so we'll skip through that. Once again, you inside bar traders, I believe yesterday it was inside the bar, but right here, so this is basically a real-time trade. I pointed it out yesterday, so I don't know who got in it, but once again, horizontal line cross. Looking at yesterday's open, which forms part of the yesterday's open here. This is today's open, D1 0, D1 1 bar ago. You can see here it crossed over yesterday's open. So once again, just using these open lines, there'd be an entry there into the lower wick zone and then out of the lower wick zone. Only 3 pairs with the range of over 100. Now that's interesting considering we've got all that, China tariff talk going on right now. I would have thought we would have had a little more movement. As you can see here, the dollar yen is outpacing the euro yen on the range. And most of the yen pairs seem to have pretty healthy ranges, except for the franc yen, only 42 pips. But even the pound yen is only at 88. So I'm not sure why the ranges have dried up so much. Maybe everybody's just waiting to see what happens. But it doesn't really matter the why. It's more the reaction, and that's what we trade, to the reaction, how price is reacting, not why it's reacting or why traders are reacting. So more opens. We have highest opens for the month, for the week, for the day, and for the year. And once again, we can use that. Now these opens, these are lines that can be moved because they are dynamic in that the highest and lowest can change. So anytime you have a higher low, unless it's a previous period, they can change. These only stay static if they're just pure opens, but these are lowest opens and highest opens. So we're measuring against something which are all the other opens. So which one's the highest, which one's the lowest? Kind of a simple concept, because usually when you have a lowest open, when price comes back and reverses through it, then it can continue on. Just something to remember when you're if you're trading the holo method. Here we go. We got daily, weeklies the same. First trading day. You can see here we just hit another missed pivot. And the buy zone based on the open line, once again, because price ranges and price has to range outside of what's called the buy zone. You go long here, you go short here. I should have named it trade zone, but I called it buy zone because I was buying stocks. I wasn't shorting stocks. So I was always looking, when can I buy? When can I buy? Rats, here we go. Green rats, get ready. Okay, so we took out today's pivot. We took out that missed pivot here. So you can see we only have a couple of missed pivots now this month, and they're right here. Maybe they can reverse sometime the rest of this month, take those pivots out. Price action, 3 ball at the bottom, get ready to go long at 80. Wick zones, in and out, in and out. Once again, horizontal line trades. Here we've got the previous day's open at the previous week's open, the previous month's open. Prices below all those you can see right here, open below the previous candle's midpoint and continued down. This is just a tick chart. We've had price come back up through the valley of the ask, and then we've had price come down through the peak of the bid. Now I spoke about the Einstein line. Once again, this is when I went to this particular trading profile. And so you see here, price went up, then came back. So this is where the money management comes in. You don't want to give back too much of that profit. We had about, what, 7 pips or so to be had. So you can see here, price made a new high. Here, price came up, came back down, went up. You can see here, failed to make a new high, put in a red candle. So right there's a turn trade, started to go up, broke out of that wick zone. So right about here, it would have been a smart place to take profit. Starting here. And once again, right here, this would have been a place to take your little profit, opportunity to get back in. So once again, just knowing that this is my relative open. So price is down. You can see it. It's the line is pointing down. There's no question. Now, let me just show you a couple other little charts I made. Here's the last 24 H1 opens. Which way is price? It's down. It's down from the last, all these opens. I mean, it's really simple to see here. And you can expand this. Here's the daily opens. Weekly opens. Monthly opens. Now, in the last 24 months, we're only above 1 open. So over the past 2 years, monthly opens were only above 1. So once again, simple stuff to tell you. Well, I'm going to wrap things up. Remember, it's not what you trade, It's how you trade it. So go out there and drain the banks.